Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, April the 12th. The year's 2021. What to practice? This video is for educational purposes only. Your results may differ from mine. When we talk about trading and practice, as I mentioned in yesterday's video, when you break it down, there's really not that much you practice. The thing about practice is usually when you practice, the results don't count. But in trading, if the results don't count, then you're really not trading. So, for example, a new platform, yeah, you need to practice entering and exiting trades so it becomes second nature. Learning where to click, what the buttons do, etc. So that's something you can practice. But the other aspects of trading, if you have a method, then the method tells you when to enter, when to exit usually. Along with the exiting part comes your risk management and your trade management, and your money management. So on the downside, it's all about, risk and money. On the upside, it's about money and trade. It's like, do you exit because of the charts, or is it you maybe hit a certain return and it's like, you're going to be happy with that. You don't want to risk giving any of it back. But, but once again, how do you really practice that? There's nothing to practice. You set your parameters and you act accordingly. And I think that's something that traders don't understand. Reading the charts, what's there to practice? You basically, when you're reading the chart, you're recognizing patterns. You can do it on static charts, like on a Saturday when the market's not moving and the market's closed, or you can do it in real time, like right now. But the thing about practice is you want to do something when you practice that you're not good at doing, so you get better at it. So what is it you're not good at when it comes to trading? There's only one thing to get good at when it comes to trading, and that's making money, right? You can do all the analyzation possible. I can run all my frequency distributions. I can run all a bunch of other statistics. But the bottom line is, I enter that trade. What happens next is up to the market. Basically, I can put on my stop loss, so I hopefully control my loss, the downside. The market's going to give me what the market's going to give me on the upside. It's going to give me the opportunity. That's all it does. Whether or not I take it to take profit, that's up to me. So it's something that you really need to be aware of when you think about practicing. There's so many methods out there. It's almost like every week somebody comes up with the new method and they pop it out there. And I think where the traders fail is that they pick methods, they don't run statistics, so they don't know which pairs work best with that method or what method to use on what pair. And they flounder. After a short period of time, they give up and they move on to the next method, only to repeat what they just did. So, as we go through the screens, the risk management, simple calculations, I've said it before and I'll keep saying it from time to time. Risk. How much money or what percent of your account are you willing to lose on any one particular trade? Because when you put that trade on, you don't know if it's going to be a winner or a loser. You want it to be a winner, but it just might be a loser. So you better put this in place. And so you either pick out your stop loss and calculate your position size, or you maybe like to trade the same position size, so you put your stop loss. And the big one, though, is the brain management. Because what the brain management can do, it can put you in the trades that you shouldn't be in if you don't have your brain management under control, or it might keep you out of trades that you should be in. Because if you have a method and you look at the statistics and the statistics seem to be tilted in your favor, then you've got to take every trade. You have to do your plans. So, for example, with the Walmart method, we're trading at those horizontal lines where price is. So when price hits that horizontal line, you got to take the trade. Now, Walmart's refined his because he doesn't take it if it's the first one, except sometimes. But he knows the nuances because of the seat time, the number of hours spent, trading and looking at the chart on the pound dollar, because that's pretty much all he trades. That's pretty much all I've traded since I started trading with him a little over a year ago, or maybe about a year ago. I think I just switched to exclusively to pound dollar. And that's just one thing that you have to understand. And I always tell traders, it's like when you learn to juggle, you start with one ball. You don't start with three. So, pick one method, pick one pair, and just stick with it till you get good at it. And the thing is, it's probably tough because one method, one pair, a lot of times you get bored. But trading was never meant to be exciting in the first place, right? It's, it's for some, it's serious business. It's a difference between food on the table and lights on and, possibly being homeless. It's interesting. I watched this video. This one guy, I guess he was living, on people's couches, going home for meals or whatever. And he went out, he got a job, made a couple grand, he put 1,000 in the market. It was like this was his last ditch effort, and he turned his 1,000 into something like 13,000-14,000 bucks and quit his job and never looked back. But he pretty much had hit rock bottom, but he said, you know what, I'm going to do it, I'm going to do it, I'm going to do it. So he basically, I guess he got his mind right to do that. But before it sounded like he didn't have his money management down, so he figured it out so he didn't make the same mistake twice. That, he took some profit, he controlled his losses, and he basically, built up his portfolio. So let's take a quick look at the pound here. What is it doing on the month? We're 33 pips below that monthly open. You can see it tried to break out of the previous month's low, but bounced. We look at the weekly. Hey, all the gaps have filled. So you weekly gap traders, looks like things paid off for you. On the week, it looks like the pound hit the pivot here. We'll check that out in a little bit. And then it's pulled back some. So we've got some interesting movement here on the pound. We dropped into the opening range for the year. We then left it, got into the opening range for the month, hit the monthly open, it looks like, or got close to it. Let's see, we have a high of 76, and we had the monthly open was 78, so missed it by a couple of pips and then pivoted off by 30 pips off of that high. Well, we got a nice range for today. So at the moment, 105 pips above the yearly open, 32 pips below the monthly open, 42 pips above the daily and weekly open. And as you can see, we touched that monthly inside bar low from last month, bounced off. It actually penetrated it by about what? 1.5 pips and bounced. We're now inside the inside bar from 2 weeks ago. So we're in the monthly inside bar. We're in the weekly inside bar, but we're not in the daily inside bar yet. And that's reflected here over on the dashboard. The range, 108, one of 4 pairs over 100. So we're approaching the previous day's high here at 49.5. So we'll see if we get a breakthrough once again. And yesterday we took out the pivot. You can see here there was some action to the downside and some action now to the upside. Oh, and for those of you wondering, the FPP, that's the future pivot point. So when the day ends, whatever this value is, that's going to be the next day's pivot. I use that to gauge, whether or not to hold a trade, since I know these pivots usually get taken out. So we've got red rats got a chance to feast here. Looks like they may have made up to 30 pips coming out of the red rat area. Looks like price wants to head back to the red rat area. And you can see here we did take out that weekly pivot. So weekly pivot traders were rewarded. Daily pivot traders were rewarded. We're in that upper wick zone. Looks like we're ready to bust out again. And looking at the imbalances, the order blocks, you can see here it's kind of confusing at the moment. Okay, we just got a high, hitting a high. It's like that previous high is about to be breached on the H1. You can see this here on the wall mall line. So we've got a wall mall hit was at 40, and right now this is on M1. Usually we look at H1, expand the chart. So taking the 40 on towards to the 50. And we'll see what happens at that level. So you can see using the price near indicator, it's near the daily high, near the H1 high one day ago and 1 hour ago, and we're right near the current H1 high at the moment also. Range for the day in the 58th percentile, so good range, but for the week we're still at 0, so there's room to move. Daily high minus close 27, so out of the rat zone. Close minus low 81, out of that rat zone. So you can see rat zone traders were paid off. High minus open 72, open minus low 36. So the buy zone traders were paid off. So you see, what is it you want to practice? Main thing I think to practice would be getting out of your own way, taking the signals as they're presented, setting your stop loss when you enter the trade, and you just have to wait and see what happens. I mean, to me, it's that simple. So, fellow traders, I hope that helps. Probably Wall Mall might be around tomorrow, so we'll get his 2 cents on what to practice. And in the meantime, when you're at your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.